start off with the hottest topic, I think, in the last few months is Bitcoin. I mean, surging, and there's a lot behind the surge, right? It's funny, the last 4 months, I've never seen more promotions in terms of people I've followed through Twitter promoting the hell out of this. And of course, they promote this and say, well, you got to own this instead of gold, which is ridiculous, right? I think you could own both of them. There's no, the thesis of why you're buying Bitcoin is a similar thesis to why you're buying gold, with minor exceptions, your limited supply, but still, your gold does have its uses, and there's a massive supply and demand disruption. There's really no supply in the market right now. But from all underdeveloped, all these guys were in massive debt. Some of the majors almost went under, in 14, 15 because it was such a bad market and they leveraged themselves to hell. Now they're in amazing shape, producing under $1,000 an ounce. It's just, to me, both industries make sense. But Bitcoin lately, where is it today? Like 27,000.
It was knocking on 30.
I mean,
it pulled back a little bit, but it's damn near 30.
Yeah, I saw 27,000 today, but I didn't even know it was pushing 30. But it's kind of amazing when you see this move where everyone's like, oh, I told you so. But this is a massive move. We're talking, what is it? Start of the year, probably. You're looking at we recommended 18 months ago. I think that's when it hit. It's like 6,000, 5,000, and then this is a massive, massive, massive move in such a short period of time, and I think everyone's getting into this. And look, it's got fundamental reasons, right? You're seeing things different today than they were in 2017, where PayPal, was it 300, 400 million people have access to it. You're looking at Visa cards, a company called Simply, I think it's called, launching Visa cards that Bitcoin Visa cards, which is huge. MicroStrategy, companies putting their money in Bitcoin, and let's go there really quick, right? That's pretty crazy when you see, what is it, MicroStrategy, right?
Yeah.
Software company, and, they're making a lot of noise because CEO's a big believer in Bitcoin, started putting a lot of his cash in it.
Yeah, CEO Michael Saylor is, you talk about not necessarily picking the exact bottom, but definitely catching the major next leg up. They started buying Bitcoin. Well, first of all, he made big headlines when he came out. And he actually, what I appreciated was he attacked it from a fiduciary responsibility role. And he basically said, hey, we're going to keep cash on our balance sheet instead of in U.S. Treasuries like most companies do, or short-term bonds of whatever sort to just, earn something. He said, we're going to keep it in Bitcoin because he was actually looking to do the best thing for the shareholders, which was really cool to me. And then you get basically a 50% increase in price since he's done that. They started buying Bitcoin. I think they bought $50 million in cash first at some point in August. No, they bought $250 million in August. Frank, I looked it up on one of their, this is as of December 21st. They have bought 70,470 Bitcoins. They've invested $1.125 billion of their cash. Now, recently, how did they raise that money? They raised over $600 million in debt to what? Buy Bitcoin. Now, if the price drops 15% or 25% instead of rallying 50, what do you say to your fiduciary responsibility there? I'm playing devil's advocate, of course. I'm giving the guy credit, but
you got to give the
guy credit for having balls to say this and do this. So, $1.125 billion invested. Their average price is about almost 16,000. So it's damn near a double.
And I'm showing it, guys. Again, if you can, you watch this on YouTube, you get to see video and everything. That's what we're doing in video. So I could show charts, I could show different things. It's not a necessity. If you watch on iTunes, it's fine. But I'm just bringing up a chart here of MicroStrategy, and let's look at the last month or so. But even if we go further back, let's go 3 months. So you're looking at a company where November 1st, November 2nd, it was 166. Today, it's 386. And that's not because business is booming. It's because of the Bitcoin strategy, right? So you're asking, is this a good strategy? I think it's very dangerous. What happens if you did this in 2000 and...
January of 18.
17, right? Because January 18 is when this thing really crashed, when we had 20,000, went all the way, I think it went as low as 3,500, 4,000, whatever, don't quote me on that, but it crashed tremendously. Everything did. Ethereum was, I think Ethereum was 1,200, right? And it crashed to 100 or whatever it was. But when you have a cash balance, it's almost like this is a Bitcoin company now, right? So I think it's very dangerous. It works out, and people are so in favor. I get so many emails. Do you see this guy? This guy's a genius. It's a genius strategy because it worked out. But what happens if he did it back in 2017 near the top, I mean, his stock price and his shareholders would get crushed because you see the move that's happening because they're in Bitcoin now. It would, look what would have happened. So the timing is good and maybe it goes higher. But when I look at the fiduciary responsibility, and now we're a publicly traded company through our CEO token, when it comes to that cash, I think, you have to be conservative with it, right? I mean, you want to invest, you want to try to earn a risk-free rate on it, right? The highest risk-free rate that you could possibly get. But to me, this is a dangerous strategy that worked. Shareholders are happy. Everyone's happy. But what happens when it doesn't work? Because, Danny, if you want a good example of this, when I was looking at crypto companies in 2017, 2016, even then 2017, so many of these ICOs came out, right? And what did they do? They raised money. They raised 5 million, 10 million. Some got lucky, raised 20, 25 million. And what did they do? All this money coming into the ICOs, utility tokens, not ours. Ours is a security token where you get equity stake and you get dividends. It's a whole different market. It's like a stock market. But utility tokens, they raised all this money in crypto around the world, right? They special exemptions, whatever, they went behind so many loopholes, and people in the U.S. they created funds that in the U.S. where if you're international, you can invest in a fund that invests in the ICO just so you can get that money, provided crazy discounts. But all that money came in was mostly in Ethereum, and these kids who raised this money didn't think of putting it into cash. And what happened? Ethereum went down 80% plus, along with most cryptos down 80, 90%. And you're sitting on a $10 million balance, which, a utility token with no utilities, you're supposed to build up the company. These people gave you that money. I mean, that's just an example of how this doesn't work. So, am I happy for these guys? Am I happy for shareholders? Yes, but I don't know. I mean, I get your opinion on it. Maybe if you invest, 5% of your cash, this guy's really going all in here.
Yeah, I mean, and again, kudos to him with the perfect timing on. I love the idea that they raised debt to buy Bitcoin. That just that makes me grin. What's going to be interesting to me is Bitcoin, at some point, everything pulls back. So it's not going to go straight to 30 or 50,000. So when it goes from, let's say 28, right now it looks like 28,150-ish. If it goes to 20, it'll be interesting to see the correlation with MicroStrategy stock, because I do think now you have a huge mindset shift with, and like you said, when things are tanking, this stock's going to go down because it's a direct play on Bitcoin as well as its business. But the interesting thing is the mindset is completely different now between the last crash and Bitcoin. So it'll be so interesting to watch and follow, and there'll be a lot of opportunity because when Bitcoin hit basically 20,000 in 2017 and then it dropped to, I think, under 4,000, do you think 4,000 is in play anytime soon? I mean, I'll admit I don't. I think maybe 10 or 12,000 would be the new 4,000, just kind of, but anything's possible, of course. But that'll be interesting to see on any pullback on how people allocate that.
No, I agree with you. I don't think we'll see 4,000, but let me ask you this. Would you tell people to buy Bitcoin here?
I would, under the one, just like a couple weeks ago, unless you're buying it one time. If you're not willing to buy it again at a higher or lower price, then I wouldn't. No. But yeah, I mean, if you want exposure to it, it's hard to, man, I think just from the 21st of December, it was at 21 or 22,000. So it's damn near up, another $10,000 since then. So it would be hard to pull the trigger right now. Frank, let's switch gears here on the tailwinds. Did you see the first national football player is going to start getting paid in Bitcoin?
Yes, I did.
Russell Okung. Is that how you say that?
I don't know his name. I just saw the news really quick, so I didn't catch the name. But it reminds me of when people wanted to get paid in euros, right? There's sports players that are like, yeah, I'd rather euros make more money. But I don't know. I mean, look, it just goes to show you, Daniel, that it's more easier to buy Bitcoin and transfer it into cash than it's ever been. Where that's when an industry scales, when you make it easy. And I think that gets lost with a lot of businesses, especially new businesses, especially in my field, who just assume everybody knows what EBITDA is and all these metrics. And, we do a good job explaining it in detail and putting things in perspective. We don't say, well, it's not trading 25 times for what earnings. We say, well, that compared to the S&P, we're just trading at 22 times earnings, or it's industry. Like, we put things in perspective. And, again, because this is our field, right? So Michael Lewis is a good example of this, where, he got my mom to go see Moneyball, which is about statistics in baseball, which two most boring things in the world. So, because he made an amazing story out of it, right? So, my mom was like, wow, I didn't know that was about statistics. But she got it, because of his writing, because of how exciting he makes it, and Billy Beane, the whole story behind it. It's, that's why he's, just a great writer. He simplifies it and brings in a much bigger audience. And I think that's what's happening with Bitcoin. And it's going to have with security tokens too, because we're seeing that become easier and easier, where, it was difficult to do. There was a lot of navigation. We were one of the first to the market. But, with Bitcoin here, it's more people have access to it, and it's not too difficult, especially if you just go through Coinbase, which is just pretty simple, and have your account up. And I think, that's going to add to more and more people looking to buy. And of course, as you know, what every trend in the world is, people love buying at the absolute top when the excitement is the most and everyone's talking about it. And a lot of times, if you look back historically, it's, not a good idea. I mean, you could have said that at 16,000, 17,000, 18,000, and it's 27,000 a couple of weeks later. But, I just think you have to be careful. I'm interested to see if the Winklevoss twins, if some of the people who were in very, very early are lightening up their holdings up thousands of percent here. It makes sense to me that they would actually, lighten up a little bit, but I don't know. I mean, I don't know. I don't know.
Nah, those guys, they're already rich. They don't need to lighten up anything. Plus, don't they have the 500,000 target?
Yes, they do. Yeah. Which would be interesting. 500,000, right? 500,000 target price in the next 10 years. And that's not assuming, I think, that it becomes, what was it? I think that's based on store of value, but not if it's an actual currency. If it becomes a currency, like, and somehow not replaces a dollar, but it's, an alternative. And, some could argue that it's already a currency, right? You could use it for lots of different things. And let's change tunes here, because
enough good news. Let's get to the SEC hammering
we
down.
Saw, news come out, which didn't surprise us. And it wasn't the SEC. It was the SEC for this. So the SEC came out and against Ripple, right? So XRP getting sued, very, very big deal. And this is one that we follow in our crypto intelligence portfolio. And it was kind of funny because, this story fits perfect within our thesis, right? I mean, you were involved in that too. We wrote it up, but, recommending this and seeing the major players in it, Wall Street players, guys. This isn't like, just kids. These are Wall Street players that were behind Ripple. A lot of big names in venture capital. And when you have a utility token, you're supposed to have utility features, right? So if you don't, it's kind of like you go to Dave & Buster's and you say if you got 4 kids, you put $25 on each card and they don't work, right? That's what it's, instead they work. It could play games that keeps the points and you can get prizes at the end. Binance is a good example of someone who has a lot of utility functions, because you don't get equity stake in these. And I think people still don't understand that. So the value is tied to the utility. What does it do by owning that crypto? And with Binance, you could, it helps. You could lower your trading fees. You could use it to purchase travel at a discount. They have like 20, 30, 40 different uses on their website where you could use the Binance token, and it has numerous utilities. Now, we recommended XRP because these guys didn't have a utility, right? And I knew there was big names in it. And these guys were dumping the crap out of the token. So as it got higher, they just sold into the market and generated a shitload of money. And they still never, I mean, if XRP goes away, there's nothing that's going to happen. It doesn't do anything. And the reason why I recommend it, because a lot of people started complaining. Then they said they were going to stop releasing tokens or selling them into the market and dumping them. And they did. And I'm like, these guys have to change, because if they don't change, they're going to get sued. These guys are going to be dead in the water. And we waited like 4 months, right? I mean, you know the story from here, but it's pretty crazy what happened to this company.
Yeah, and the big takeaway there for me in a new industry in cryptocurrency, and I'm not a computer engineer, I'm genius on those levels at all. So, I really had to dig into some of this just to try to make sense of it. But it doesn't matter what widgets or market you're in, you still have to take in the factor of human nature. And the thing that was so cool about that into this new industry was you had a stellar management team with reputations, and then you had, like you said, they would release so many XRP into the market to raise capital. And we're not talking about a little amount. So when we recommend it, you dubbed them as basically the most hated management team or the most hated crypto and cryptocurrency in XRP. We added to it a couple times. We first bought it in November of 2019. Then we recommended a little bit more in January of 2020, and then again in June. and then sold it in September. The cool thing is we ended up getting out of it for about an 18% gain, but the difference between when we recommended it, so from Q2 in 2019 to Q3 2019, in Q2 they sold $250 million worth of XRP into the market, which obviously pissed off a lot of people as prices were going down and everything. Fast forward one quarter, it went from 251 to 66,
which was good.
Obviously, it kept going down. In last quarter of I think the first quarter, they went all the way down to 1.75 million in Q1 of 2020. That was total XRP sales, and that was way down from 13 million the previous quarter going back. So what did they do recently, though? It went right back up to the 30s, but in addition to the SEC investigation, and that crypto is down 50% from basically just a few days ago. I think it's around 20 cents. It was a little higher than 40. So, seeing what management needs to do and they don't follow through, you can get out and cut your losses or gains and move on. It's a good overall macro lesson.
Yeah, I mean, recommending this for what I saw is, all right, people are complaining they have to stop dumping these tokens, which is basically insider sales. Nobody knows where this money's going, right? Nobody knows. They don't have to report anything with these utility companies, anything. Like how much the management has, what they're actually doing with that cash, what are they developing. All I know is they're raising a shitload of money, and the company still has no utilities, meaning these guys could raise $20 million and buy 6 houses. You don't know, right? There's not, that's the difference between security tokens and utility tokens. But seeing that management team and the people behind it and saying, okay, these guys are going to, a lot of people came out and said that, this is a fraud, they have new utilities. And I'm like, okay, this thing's going to turn because these guys get it. Their management team, they understand if they don't change this, they're going to get sued. And they started changing and, we benefit. And then we got out. And I mean, what was the gain that we got out at? How much was it?
18%.
18%, right?
Which is zero in the world of crypto.
I mean, you can look at some of our crypto holdings and, like most people in crypto, but, we've done a really, really good job in crypto. Our performances, we closed out for 500% gain. We're up 400%. We're up 300% in several stocks. Massive, massive winners that we got in. And we didn't take a ton of risk. We did it through really established tokens with good management teams, not like crazy stuff. Again, we took advantage of DeFi with Aragon, and I think we closed out at 520, 530, whatever it was, a position in just a few months. But this is one of the most important to me. It's even if it was a small loss, and I've said this before, where we recommended a company in I forgot which newsletter it was in. Was it Summit? Not Summit. No, it was because Summit's up a lot now, so it's above a buy-up price. I'm not going to give away stocks here, but it was Standard Motor Products.
Oh, yeah.
So Standard Motor Products actually it was up 15% for us in a couple months, right? Really starting to take off. And then they lost their largest customer, and the stock sold off about 15, 16%. We took like a 1% loss on it, whatever it was. You have to realize if you're an investor that those are so much more important than the massive wins, right? Because you're going to have massive wins, but it's how do you limit your losses? For me, if you told me a small cap company lost its largest customer and they just said, look, we're going to do a lot of this stuff in-house, and you only lose 1%, that's pretty amazing. With Ripple, talking about how this is kind of, these guys need to change. They need to change or they're going to get sued. and they didn't, and we got out, and, we have to get out at a gain. But now when you look where it is now and where it's going, guys, this is something that's absolutely worthless. When they go through the books, the SEC, for this company, the stuff they're going to find, where's all the money going? They're going to look at all these guys' accounts and say, okay, here's where all the money's going. You still have no utility uses, which means XRP is worthless. It may go up 100% from here or 200% from here. I don't know what it's going to do, but I know that specific one is worthless because it has no utility functions. It's being investigated by the SEC. And from someone who's researched hundreds, 600, 700 of these, and 90% were garbage, this was one of the ones that, I'm glad the SEC is doing its job and cleaning it up because this is an incredible industry that has amazing potential, especially with security tokens and Coinbase going public. They're going to have to list security tokens because you look at utility tokens have little regulation and they're going to be deemed securities. So they have to get into security tokens in order to grow that exchange, right? So, I'm glad. I like to see this. I think a lot of people are like, well, the SEC should stay away and total, decentralized and stuff. You got to be careful. You got to understand that for an investor coming into this industry, that money has to be safe. And seeing guys like this and people saying, oh, it's crypto. It's not just crypto. There's Wall Street guys behind this. And that's what really pisses me off. I mean, I don't know. And there's going to be more to come because there's a lot of companies just like this.
Yeah. And even to add to the stress on that side, if you're a holder of that, Let's say the SEC looks through the books and you come out in 6 months with a decent headline. Well, that ain't really going to help you because Coinbase is already announcing they're going to suspend trading. So maybe they'll bring all that back on. But man, that's a wild ride as an investor, and we've dealt with our losers, and like you always say, the stress of following those and trying to figure out what to do and go through everything. Man, that's just I'm glad we're out of that, and it's a good lesson, so we can move on from that. Thank goodness.